Hello, YouTube. Justin here. In this video, we're going to talk about oil, and we're going to talk about how Joe Biden's going to be speaking at 10:45 a.m. today and what the ramifications of that will be. So let's jump straight in because there's a little bit for us to go through. Happy Tuesday. And we know that things are getting turbulent in terms of geopolitics. So I think what's really important for us to understand is that it's okay to be wrong. It is not okay to stay wrong. And what I mean by that is yesterday I provided, again, a bullish thesis that could happen sometime in the next couple of months. And before we look at oil, let's actually jump over here and look at SPY. So we have a dominant pattern in here. We have a head and shoulders pattern. We are now below the 50 EMA. We are below the green line, which means that we're bearish. Oops, I don't have my charting software open. Let me open up that one. So what this basically just means to me is that we lost the 427 low. After losing the low, where do we go back down and test? Well, we tested the next low. The next low here is at 420.76. We even went a little bit lower. So what this already tells us is that if yesterday, after we lost the 427 low, we went back down and test the next one, piercing the level means that dip buyers were no longer willing to buy at that level. So let's think about that right now. What did we do? Well, we poked below the next low. So if we're not able to save it today by getting back above 420.77 fast, we're likely going to go back down and test this next one. That's what technical analysis is. And hopefully people understand that. And all it means is that we have to be aware of the levels and where we're wrong. So again, let me reiterate. Whoa, my camera is really blurry. I'm just going to leave it off because it's really blurry. And yes, my camera is a little bit blurry, even though it's 1080p. I apologize. And I'm vulnerable to making human emotional decision sometime, right? I'm human. Sorry for expressing emotion in some of the videos. Anyways, jumping back to here, what we have to keep in mind, like I said, is that if we rally today and we fail to claim 421 near the open, that's really important because Joe Biden's going to be speaking at about 10:45 a.m. today. So let's think about this. There is going to be a known catalyst that's going to be happening 75 minutes after the market opens. If we are above or below the 420.76 area, that's your clue. That's your clue. Why? Well, because what Joe Biden's going to be talking about is going to be, again, the Biden administration is poised to impose a ban on U.S. imports of Russian energy as soon as Tuesday without participation of the European allies, according to people familiar with the matter. So what that means is that, again, 75 minutes after the market opens, if we are above or below 421, it tells us whether or not the bulls or bears are in short-term control. If the bears are in control, well, where's the next natural support for them to cover or for the bulls to defend? That's all the way down here at roughly 410. So it's almost 10 points lower. So again, make this very simple. If we are below 420 at 10:45 a.m., we are likely going lower. However, this has been pre-announced. So if we are above 421, there is potential for us to snap back and get back up here to roughly 428. The reason why I mentioned 428 as well is because we've already hit that level in the overnight session. So on ES, we hit a high of roughly, a high here is 4233, which means that we've already made some progress back higher. Is that enough? I don't know. And what's going to be important for us is going to be what is happening to these underlying commodities. We've been talking about the dollar. We've been talking about gold and Bitcoin. So let's have a look at those. So looking here at oil, again, on that headline, we did see a notable tick higher. So on the hourly chart here, you can see where the volume came in and the move higher. We're moving back up. So again, crude oil on the futures market is currently going back up. What we have to keep in mind is that who is left to buy oil? So again, supply and demand. That's how the market works. There's buyers, there's sellers. And for every buyer, there has to be a seller. So if we look over here at ZW, which is the wheat futures, the reason why this chart has no trading in these last 2 days here is because we hit a limit up. We hit a limit up, which means there's no more trading available. Limit up, and now the limit's gone. So at some point, the pressure got released on wheat. And oops, let me just get back to here. The reason why that matters is because a 90-degree angle, by definition, is not sustainable. Why? Nothing can go straight up forever, not even your ego. So again, looking here, we go straight up. We have these limits up, which are the telltale sign that people are trapped. They're trying to get out, which means they're trying to get out at any cost. And now we see that reaction here and it's starting to come back down. So at some point, crude will come out. Is that going to be today? I don't know. Is it going to be tomorrow? I don't know. Is it going to be next week, next month? I don't know. But at some point, the rate of ascent is no longer going to be the Nike swoosh. It's going to do one of three things. It's either going to keep going up at this angle of ascent, which is basically 90%. It's going to start flattening out, or it's going to start going down. What's really important to remember too is that if you think back to 2020 when oil went negative, that's right, it went negative. It went down here to negative 40. Why? Well, because it traded at an extreme. So the market can remain irrational longer than you can remain solvent. And back in 2020, we pretty much had the exact opposite of what we see now. So when we were at negative oil, negative $40 a barrel, everyone's like, oh my God, oil's never going to recover. It's going to go to negative 1,000. It didn't. Why? Because there's intrinsic value. And at the end of the day, again, I can't predict the future. What I can predict is that when the charts tell us that we've topped out, we've topped out. So as of right now, we know that we're hitting an extreme. How long will that extreme last? We don't know. So that's what I'll start off with here today. We will get feedback though. And what matters for us is that relative low at roughly 420. Next thing to look at here is just going to be other risk assets. So let's look at DXY first to get a gauge here. It's at 98.9. It's down by about 0.25% on the day. So the reason why this matters is because we're now seeing that the dollar is actually starting to ease a little bit, remembering that everything priced in US dollars, like gold, like stocks, like Bitcoin, that is all going to get a little bit of a lift if the dollar is down. So on the daily chart, we're down just a little bit. This looks a lot like crude as well, because there is that artificial demand for dollars when people are liquidating assets in other countries and they are priced in US dollars. So sell your stocks, again, sell your Russian stocks, get US dollars. Sell your Russian oil, get US dollars. That's what's happening. So whether or not we go back to green on the day is likely also going to add pressure to the major stocks, meaning SPY and QQQ. And then as we look forward to other risk assets that are interesting to me, notably Bitcoin and Ethereum, the reason why I'm putting these out is because Joe Biden yesterday said that they're potentially going to be adding in some sanctions and to regulate crypto. Well, what did it do? It went up. What does that mean? Well, again, markets generally bottom on bad news. So again, I don't know if this is a bottom for Bitcoin. It appears like it might be. Again, keyword being might. But the negative bad news that everyone was scared about, regulation from the government, it didn't hurt it. Not quite yet. And when we look at Ethereum, again, Ethereum right now is up by about 3.5% here, back above 2,500. Again, it's trying to catch a bid. So are stocks going to do the same thing? I don't know. What I do know is that when we look at the weekly charts and monthly charts, we have the clearly defined levels. So again, trying to wrap this all up with a little bow to make sure it understands, everyone understands here. The three things that I will be watching to know whether or not stocks are ready to stop going down, ready to start going sideways, and then potentially ready to start going up are going to be the three things I just mentioned. So crude, the dollar, and then gold and wheat. Sorry, those three things. So the three commodities I would say would be crude oil, gold, and then I forget what the last one was. I just had a brain fart. Gold here. So if these ones start leveling off, that is going to be potentially what we want to see for the market to go back up. And the reason why I'm pointing this out is because we know the areas. The areas that matter for us are going to be the ones on the monthly chart. On the monthly chart, we've got three levels here. So again, just looking visually across here, well, again, we're back below here. So if we can't reclaim the low at about 420.7, we're probably going back down to test 410. If we can get back above 421, the next natural spot for me would be the open of the month at roughly 435. But before that, we have our quarterly base that we're forming here. So again, just going back to our quarterly chart, this is where we are right now. This is a 3-month candle. And what we pointed out in the weekend deep dive is that we're looking for a snapback between now and end of the month. It's currently March 8th. We have the CPI print coming out on Thursday. We've got the EU Leader Summit on Thursday as well. And then next Wednesday, we have the FOMC. So let me see, my camera's actually not all blurry here. So what that means for me is that we know the catalysts which could potentially move the market up or move the market down. What we don't know is, so again, there's the news, there's the reaction to the news. So more important than what the news is, it's the reaction. So now that we know what the key things to look at for today are, I encourage you to be mindful of the levels, be mindful of whether or not we're getting early feedback, but then remembering that we don't know whether the price action is confirmed until the candle closes. So for a daily chart, that means closing out at 4 o'clock. For a weekly chart, that means waiting all the way till Friday. So if you're looking and using your TA or your technicals based on a weekly chart or a monthly chart or a daily chart, you have to wait for that period to close out to get the confirmation. So with that said, I wish you guys all the best of luck today. And again, Joe Biden will be speaking at 10:45. And if you want to see my bear thesis for the year, again, I encourage you to go back and watch the bear market of 2022. If you're looking for the bull potential, that's what we laid out on this last weekend. Thank you for watching, and we'll see you guys tomorrow. Thank you.